Yeah. So, welcome to Cashflow Chronicles with Chris and Matt. Matt's gonna have to do this with sign language going forward.
Chris says he can't hear me. You guys got to let me know if you can hear me.
Sorry, guys. Look at this. Look at this. See, this is why you need Indian people like me. Call desktop support. Hello, my friend. Did you try taking the plug out, putting it back in? Hey, Matt, why don't you try restarting your computer? You ever try that?
Can you guys hear me?
Yeah,
let me know if you can't hear me.
Come on, man. Just restart the
curious.
computer. Try taking the plug out and putting it back in. Did that work? You know.
Because it says it's picking me up.
The audio drivers.
I'm hearing static from Chris. That's what I'm hearing.
You cannot hear. Okay.
It's like clicking.
Okay, I am going to need to remote into your PC. Take my code.
I'm hearing static from Chris's side. Yeah, Chris is.
Wait, see, everyone can hear me. Messed up one?
I'm telling you, man. Nobody listen to the fat man. Man, man. I can hear you. No, I can hear you. It's just a little staticky.
Hold on. All right.
I don't know. He's over here blaming the fat boy, but so much for Desi support over here. Sounds like we got to call Mumbai.
Okay, how does that? Is mine work?
Your works fine. Let me see if I can. Can you hear me?
Mine should work okay now.
What about mine? Can you hear me? You can't hear me.
Me? No.
I can hear you.
Can you guys hear me okay? All right, there we go. Well, I guess we're going to have to do this at another time. Sorry, guys.
Is that not, you just can't hear me at all,
this is so stupid. Well, Streamlabs, you just lost a customer.
Yeah.
We're going to have to redo this.
Chris is quiet. I'm good.
Wait, Matt is okay? I'm the one? Hold on.
Mm-hmm. Yeah.
Chris is quiet. I'm good. Matt is okay? I'm the one? We can't hear each other.
I know. I don't know why we can't hear each other.
Okay, hold on. Oh, it is me. It is me.
Jesus Christ.
There we go. It was me.
Yeah. We're over here trying to talk about inflation, and Chris is deflating his noise.
I was wondering. I was like, "Oh, there's the wrong." I realized it was the wrong headphone input. Okay, it was my bad.
It's all good, man. It's all good. I was so confused, man. I was like,
"You're a little hot."
Really
you're
is.
You're a little hot.
Yeah. Streamlabs is a little. It had to be. Because I was just like, I was looking at the mic and it was picking up perfectly fine. I was confused, man.
All right.
People liked your help support desk though. We'll have to keep that one in the pocket.
It turns out the desktop support guy needed to restart his shit.
Yeah.
How many times did that happen?
I turned the gain down, so let me know if I'm still really loud.
No, it sounds perfect now.
Okay, perfect. All right. Welcome back to the Cashflow Chronicles. Apologies for our technical difficulties, and by technical difficulties, I mean Chris's technical difficulties. Yep. I'm just messing with you, man. Inflation, man. I was honestly very surprised about the numbers. I know you just got off a conversation with the boys on Finance Junkies talking about it, but shelter still coming down, car prices still coming down, food still kind of coming down, energy prices are on their way back down, but for October they were still a little elevated. I'm just kind of curious what your thoughts are. Where do you think we're going from here? I know we talk about it every month, but I'm kind of curious as to, do you really think on your trend? I know that's a Patreon exclusive, so I don't want to bring that up and have you bring it up, but do you really think we're on pace for getting into the twos in the next couple months?
Yes, sir. I absolutely believe it. Mainly because I think a lot of the impacts from the rate hikes are only starting to get felt now, right? All that lag is going to come to head. And so when those things show up on the CPI, it's just going to be easier for the Fed to make a decision on the rate cuts next year. But then again, I'm looking for credit events right now, because what tends to happen is when things gyrate from overabundance to underabundance or the other way around, you see these sudden moves, and there's traditionally something that breaks in the economy. So that's what I'm worried about right now. So I'm looking at this purely from the credit perspective to say, okay, where are we likely to go? I would say the biggest risk to the market is commercial real estate right now. But the key to it is that a lot of commercial real estate has been so valued down that it makes absolute sense to invest in it. That's why I look at SLG today, look at Vornado. They're up 16%, 17%. I think at one point I was looking at SLG, it was up 20% on the day, which is nuts. So I think commercial real estate could be the trigger, but it could also be the opportunity, depending on how, if like there's a gap that the Fed is going to have where they can rescue the entire market or just make sure that the market doesn't crash on itself. And the more the CPI goes in their favor, the better chance we have at them having the tools necessary to keep us from getting into a major recession. I know a lot of people have been saying, oh, but recession is coming. I right now, based on the data that I'm seeing, am not seeing that recession materialize. That doesn't mean that data cannot change within the next 90 days. It's just at this current moment, I don't see a recession.
I was having the same conversation with somebody at work today. They're saying, you know what? I've had about 15% of my money in cash. And I was like, well, I wish you'd talk to me about that. I mean, I talk to them pretty frequently. It's about once or twice a month. And they're always asking me about, do they think it should be risk on, risk off? And I tell them that, I'm always invested, right? I know some people like to pull a little bit of money off, and I should be better about that too. And but I always tell people I'm fully invested, right? Every single time I get a paycheck, I'm putting it into the market, because I'm playing the long game, and I know in 10 years time, that money is going to be growing versus if you're trying to time the market, you're probably going to miss it and end up in a situation like this. We were down below 4,000 on the S&P 500, and here they are sitting in 15% cash, and we're within $300 of getting back to all-time highs on the S&P. And they're asking me now, is now the right time? And it's like, well, you kind of missed the opportunity, right? And I recognize they were toying a little bit with treasuries and stuff like that. And so, I get it, but I'm with you. I'm like, I don't personally see, everyone's talking about a recession next year. And my thought is when everyone's talking about a recession, it's likely that there's not going to be a recession, right? Like I always kind of get that feeling. And it's always when, everyone thinks that everything's going to be great and go to the moon, think late 2021, early 2022, that everything kind of takes a dive, right? And that's what happened in 2022. I mean, the rise of interest rates really played an impact in a lot of different stocks and everything the like, but everyone thought that the party was going to continue into mid 2022 or even up to 2023, even while we were going to be raising rates. And so it just feels like, to me, everyone still feels like there's a recession or the rug is going to be pulled out from underneath us. And to me, I think that just means that things are going to be fine. But I agree that, the worst of it is over. I just still can't see, when somebody like Jay Powell and all these people with very fancy economic degrees, and I'm just some, basement dwelling engineer, I just can't see how we get to mid twos within, the next quarter or even in the first half of 2024, considering Jay Powell thinks in the previous forecasts that were out there, he wasn't thinking we were going to get into the low twos or 2.0 until 2025, mid 2025 time period. Now, if that changed, that forecast has changed, I haven't seen it, but the past few monthly reports that have kind of been out there from the FOMC, it still feels like that 2.0 is in a 2025 time period. Anyway, just some thoughts.
Yeah, I mean, I would say the Fed right now is doing everything in its power to not break something. But the market works how the market works. Let's go through each of the categories. The one that I think makes the most sense to look at is energy first. Energy definitely led the way in and can you somehow make actually the the x-axis smaller, or no? No. So I know that it's a close-in. Sometimes what happens is when you have too far out with the x-axis, it can kind of like distort the data a little bit, because if you look at it on a year-over-year basis, it's usually important. All right, forget it. Don't worry about it. Just go to energy.
Maybe on a different site, but not on this case.
Yeah. So energy right now, if you look at the massive dip that we had compared to last year, where last year energy was up. Get rid of shelter. Let's just look at energy by itself. So if you look at that massive downward move from 2022, because the scale is off, but it's fine. It's fine. You see that downward move from 25% all the way down to almost negative 15%. That's what really led the decline in inflation in the June, July, and August months, where August started to actually go back up after the Saudis and the Russians, really just started to say, oh, we're going to do supply cuts. But the US at the same time was just producing so much oil and negated all of that stuff. So a lot of the lead that we're seeing in CPI right now of declines are being led by energy. Go to electricity prices also, because natural gas feeds right into electricity. And you can see that sharp decline has not broken to the upside like oil did in June, July of early summer. This right here, I think, will get back to its historical norms of about 2% sooner rather than later. So this should help also. But the one that I think matters the most is going to be shelter. Look at shelter. Shelter is still relatively elevated compared to regular CPI. So this is the next shoe to drop. And every sign that I'm seeing right now tells me that shelter is the next one that's going to lead the wave lower. And it's going to be a lot more pronounced than people think. And I put up a lot of data points on the Patreon to show what exactly is going on, not just here in the US, but it's an international phenomenon. I think there's so much bullshit that's going on in the market. Oh, there's not enough housing for everyone, blah, 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 all that nonsense. Well, if you look through the data, you can actually see that no, housing inventory is actually being added at a pretty rapid clip, but a lot of it was bought up by speculators. And as the speculators leave the market, you're gonna see the price of shelter come down significantly.
I just feel like the thing that I'm just pulling up housing inventories here in the background. I just can't understand, because when I look at this is pulling up we talk about this pretty regularly as well, but let me just share this. The thing that I don't understand is, I know for a fact, just based off of what I've seen and housing around the Houston area, so I know that that's kind of a particular home. But the thought is like, when I look at what they're showing with respect to, let me just share like the last 2 years. When I see what they're showing on the inflation report, to me, that seems like it's behind, because I just don't understand how it's just coming down, after a few months, when it feels like the bricks have been put on all this shelter, whether it's commercial, whether it's normal home prices. Like, I just feel like, nobody's been buying a home, which is why you're seeing this, steadily creep up, right? Yes, there's the seasonality piece built into this, but I'm honestly really curious how this spikes up in the winter time, because I know it's going to be seasonal, but I'm curious if we actually start approaching to a point where it actually gets closer to maybe like the 800 or 850,000 homes listed, and it doesn't curl over as much, because I think we've had so many people and so many houses being built. Like in my community, I think like 50% of the houses are still up for sale. And I just don't see them moving very quickly. Whereas just a year ago, 2 years ago, it might just be recency bias. It just seemed like as soon as a house was put up on the market, it would immediately go under contract. It just feels a completely different world overall with what we're kind of seeing. But
here's one DD point that no one really is talking about. Go up to the search, type in multifamily, not multifamily, like shelter, and type in multifamily construction. Or just type in construction right there. Go up there.
This is residential construction.
No, not that. Go to residential construction. Well, residential under construction, I think. And look for there it is. New privately owned. There you go. Hold on. And with more than 5 units right there.
There you go.
Okay. You see that right there?
Yeah. Let me zoom in a little bit for y'all.
No. Don't zoom in. Go historically all the way back. This is the one you want to show. Look at how many units are under construction. Basically apartments in apartment buildings. It is at historical highs. Okay. Historical highs. Not, the last 10, 20 years. Historical highs. This is how many units are under construction right now. Think about when all these things start landing in the economy, what that's going to do to rent prices. And if rent goes down, then cap rates on homes go down. If homes go down, real estate goes down. There you go.
And I would say this is why you need to look at things like what's actually reported nationwide. Because if you had asked me this right now without looking at this data, I would have said, I see a lot more buildings last year for apartment buildings, at least in Houston, being built versus this year. It seems like, a lot of them have been completed and a lot of them are already kind of being leased out. But like the past 3 or 4 years, I would have said Houston was absolutely on fire. The amount of buildings that I've seen for multifamily purposes, like the building that I just left, it's probably a 200, 300 person building. The building I used to live in, before I left for Trinidad back in 2020, that was, I think, like a 576 unit building. Like there was ones being built literally all around that used to just be vacant lots. And they started just building when I moved into that area in Houston, I'm talking in the 2016 timeframe, a lot of open lots were there, and they probably built just within the a mile radius of me, probably 6 or 7 different massive communities. They are still building some, but would have been 2-3 years ago, it was a lot more. So to see this just goes to show me that maybe Houston is a little bit ahead of the curve of some of these other cities, but yeah, it's crazy to see it. If all those cities are very similar to the way Houston was, maybe 2 or 3 years ago or 4 years ago before I moved back to the U.S., or before I left the U.S. rather, then that's a lot, and that's a lot of inventory to have to pick up and kind of get rid of. Anyway, just some food for thought. So it goes back to, don't always have recency bias and always kind of look at the data coming from the Fed, but at the same time, how up to date is this, right? I mean, this is talking about August timeframe. It doesn't have, it says it has September numbers. It doesn't have the October numbers in here yet. I don't know. I'm just a little skeptical. It seems like this data might be behind by a month or two. You know what I mean? It just doesn't seem like. Anyway, just some thoughts.
And then another data point that no one seems to be talking about, but is actually very important to look at, is U.S. population growth. Just type that in, U.S. population growth. And I don't know if the Fred data has that, because that might be census. Okay.
Well, this is annual growth. Yeah.
Right. Now, if you look at annual growth, look at how much we're growing right now. Barely 2%, barely 0.1 or 0.2%. This includes net migration. Compare it historically. Look at what it was before. So every year before, and let's say 1965, it was growing at almost 2%, 1%. Right. Look at now. It's barely growing, even with all the immigration that's coming into the thing. People are not having as many kids. A lot of population is starting to come down. So you're seeing all this inventory going to come to market. You're going to see baby boomers start dying off. You're seeing population growth kind of flatlining. What does that tell you that's going to happen in 10 years from now?
I don't know.
Deflation. We are going to have Japanese style deflation for the next 10 years. And so one of the reasons why I'm not overly optimistic about housing for the next 10 years is because if you are buying a house right now, you are paying at the top of the market at the highest rates available. So my thing is right now we are having a structural demographic shift that is going to play out over the next 10 years. And a lot of people are saying, fuck them kids, cost too much to have kids. You are absolutely right, which is why a lot of people are not having kids right now, so it'll be a very interesting thing to see all the existing inventory plus new inventory that comes online. Of course, you're going to have a natural churn, but I think housing is going to be very flat. A lot of that flatness will start showing up next year in the general economy. And so, yeah. So I think last year we had this fluke with supply chain issues with shelter that should resolve themselves, and we'll see where things go.
Well, that's inflation. I mean, I'm not exactly sure. We didn't have any other companies on the docket to kind of talk about or look at today.
Let's look at our portfolio. How did our portfolio do today?
Let me see if I could pull it up. Our portfolio is doing rather well. I think we almost hit $500.
That DPST, which is a regional bank ETF.
Man. Your stock is not the best in the portfolio, Chris.
It's not
as much as you would like to think. As much as you would like to think. Let me just double check that I'm not sharing this. Okay. I just don't want people stealing my account numbers and shit. And I have to screen cap it here because there's an account number in here. But believe it or not, let me just double check before I eat my words. Yeah, my guy. Still your boy's pick. Your boy's pick is still numero uno.
Which one? Which one is that? Which one is outperforming?
Take a guess. Take a guess.
I don't know. Palantir?
No.
Did you buy any Palantir in there? I don't know.
I didn't actually. I should. Sorry.
No, not at this price. No, not at this price.
Let me scroll. Oh, by the way, I wanted to say last week when we did the Palantir, maybe it's 2 weeks ago now, when we did the Palantir earnings, chit chat. Let me just double check. People can't read these numbers. Let me scribble out a little bit more. When we did,
Dean's like, I sold my DPST when it hit 25%. Congrats, Dean. What can I tell you, man? If you make money, you made money, man.
I wish we bought. I still think this is going to be a good one, especially going in to. Let me share the entire screen over here. So TQQQ, your boy with TQQQ over here. But you're right. I mean, I messed up, right? I didn't buy DPST at the right price, right? It was up 22% today. But we already bought it when it had already kind of hit a run starting last week. But ABCL is up 10%. Bros is up 7%. Disney's up 4%. DPST is only up 3.5% because that's my fault. I mean, I wish. Well, it wasn't my fault. It was up 16% the day we bought it, and then it was up another 4 or 5% the day of when we bought it. So it was hard to get a good price. Rocket Lab down a little bit. That's a 20-year hold, though, 10-year hold. TLT starting to make some moves. TQQQ up 17, and Verizon slacking, the second worst performer. Hot, Chris.
It'll come. It's going to come. Don't worry.
0.6%. I know. But the thing that I was actually most thoughtful of was I was looking at the dividend view, and Fidelity, you can look at the dividend view. And by the way, next week or something like that, we have another check coming in. So we have some more money. We have $86 in cash still. And next week we'll have another $150 to
I've got
play
a couple
with.
of names. Paycom, baby. Paycom.
What about PayPal, Chris? Are you a big PayPal guy?
I'm waiting on more data to come out from the new management.
Okay, because I still hear people like they're all excited about PayPal. It's like, you're still down 30% year to date. So I don't know. Yeah. But you could say that about a lot of stocks. So maybe I'm being bearish on PayPal. But the cool thing was almost $8.50 or something like that in dividends for this. So it's about a 1.7% dividend yield, which is kind of cool. Kind of expected for this. So I'm curious to see.
It's kind of sad. We didn't buy any SLG in this portfolio.
I know. It actually would have been a good time to buy SLG too. Shit. Because it was dipped back into the low
29. It was almost at 29 something.
It dipped into like the high 20s at some point rather recently.
Mm-hmm.
Yeah. Shit, we should have done that.
And it's got that monthly dividend, that juicy monthly dividend.
I know that would have been boosting up our dividend. We would probably be at like 2.5 to 3% if we bought a few shares. Anyway, some food for thought. I mean, some good companies in here that have done rather well, but it just goes to show you, like, this really has only been a month or so, not even a month old. And you can see, you know, just moving at the right time, just buying consistently, you already make a little bit of money. It's not a lot, but multiply that by, 10 times, just consistently doing this on a monthly basis, you're adding another little revenue stream to your monthly income,
Yep.
So cool. Well, there's that. But I was curious. So I don't know if you know much about two particular companies. There's a guy who keeps messaging me. I don't know if you see him. He always asks us to look at Rumble, which is like a competitor to YouTube. Mm-hmm. And then I don't know if you know much about the space company called Astra. But let me just touch about Astra a little bit. And then if you have any companies in the background that you want to talk about, let me know. But Astra, for those of you guys that are not familiar, it's been having troubles with paying their bills, right? And so let me just pull up the company here. They actually reported earnings yesterday. And when I actually went to go and look at their quarterly report, just like how I always do, it didn't actually say anything. Like, it basically said, here's the total addressable market, and this is that, but like they didn't actually give any revenue. They didn't actually give any, like, how much cash they burned and stuff like that. I'm like, are these guys just straight up just giving up? Like, it was really confusing. Their 10Q still hasn't been posted. It's the day after earnings when they reported yesterday. And it's like they did a really good job explaining the total addressable market and how they're positioning themselves to be part of space launches, satellites as a service, all this. But at the end of the day, they didn't actually report anything. So, like, I wanted to talk about it today, but like, it's kind of a moot point because there's literally nothing to talk about other than they might be going private per their, I guess, some news sources. And then second, they have come to an intermittent agreement about some financing. So that's literally all I can report about Astra. It doesn't seem like it's good if you're not reporting any numbers and your 10Q is not posted yet. Then it doesn't seem like you're on good financial footing. So anyway, that's all I can say about Astra. Likely to go to zero.
Yeah, I mean, I saw they had some deals with a couple of major companies to do some satellite launches, but I don't know, man. Right now, rocketry is in its infancy. That requires a lot of capital-intensive investment, and the payoff is not there yet. The big boy leader right now, which is proven, which is SpaceX, is doing phenomenally well. I am keeping my eye on Blue Origin, though. Blue Origin is in some stages of production on some of their newer rockets. So they're nowhere near where SpaceX is, but it could be a great investment, especially because, this is just a cherry on top if you buy Amazon. If Kuiper becomes really synonymous, really popular, and Blue Origin's funded very well by Amazon. So in terms of like being a number 2 for SpaceX as a competitor, could be Blue Origin. I know they haven't had nearly the amount of success as SpaceX, but hey, they have a different like idea of how they want to go about things. So where SpaceX is just like, let's launch a whole bunch of rockets and see what works. Blue Origin is taking hey, let's be methodical with our approach and just be slow about it. So it'll be interesting to see who ultimately ends up becoming a major player. And I think, there's enough room, in my opinion, for multiple players. So if I could, I would say just backdoor my way in through Amazon. So just buy Amazon. You're getting a strong business and you're getting a strong secondary business. So in case that the future is really, really bright for, space launches, which it looks like it could be a possibility, you're getting best of both worlds. So
you're not saying buy Amazon stock because they don't own a port of Blue Origin. You're just saying because they'll get at cost satellite launches if they happen to go down that route. Is that kind of what you're saying?
Well, I'm saying if I'm bullish on, let's say I'm bullish on space companies, like rocket companies.
Yeah.
But I want to make sure that it doesn't go to zero, because right now that just the capital intensity is really high, right?
Of course.
Instead of betting on Rocket Lab, instead of betting on Astra and these other companies, which are not fully funded and still have to rely sometimes on the debt market, sometimes on the good grace of the government sometimes. I would rather be in Amazon, where Amazon can fund their losses for a prolonged period of time. And then eventually when the profitability does come, it comes to you as a shareholder of Amazon. You know what I mean? So right now, that's what I'm saying. It's like a cherry on top. Like same thing with Rivian. If Rivian ends up becoming a major electric car player, you as an Amazon shareholder make money because Amazon owns a part of Rivian. So Blue Origin becomes a big thing. You get a piece of that. So that's one of the keys to Amazon. I think they have such a strong business already. They can fund a lot of these other projects and see where things go. So I'd say instead of investing directly into any of these companies, I'd probably go the Amazon route. But
for sure.
Hey, TJ, welcome,
TJ,
man.
My guy. Hope things are good,
hey,
man.
TJ, feel better, man. I hope everything went well. Looking forward to having you back on the YouTube soon enough.
Yeah, man. I just wanted to touch a little bit about the ticker on the bottom. So I couldn't believe it. Updating it, NVIDIA is almost at $500 a share. Dutch Bros is upwards of $28 a share. Palantir crossed over $20 today. And what a difference a month makes after earnings. Google is back to where it was pre-earnings of almost $135 a share. Amazon's in the 140 still. Oil prices are still down $78 a barrel. Henry Hub gas prices just over $3. The only thing that's really going in the wrong direction, probably a little bit with oil, but also Bitcoin. Bitcoin was kind of hovering upwards and some people were hoping that it was going to cross over to the $40,000 mark. It's taking a slight pull back. Could be an opportunity for Amit to finally buy some. You're not really a crypto bug, are you?
No. Yeah. I look at the market, but I'm not overly like bullish on crypto as like the next big asset class. Mm-hmm. I mean, you know what? I truly believe that Bitcoin could one day become a big thing, but it just does not fit into my wheelhouse. And so it ends up being that I become too emotional about it, right? Whereas if I don't see the business value, it's hard for me to invest in it. So what ends up happening is that I'll just keep looking at it. And every time it goes down, I feel like crap, I fucked up. And so instead of dealing with that agita, I don't want to deal with it. So I'm just like, fuck it. Right. I hope to God it gets to $100,000 so that I can, and my friends are all invested in it, like Carlos. So I don't mind. I'll ride Carlos's private jet somewhere.
There you go. The best jet is the one that you don't own. Yeah. And then
that's right.
You get, but yeah, you could, and same thing with boats too. Boats are a pain in the ass, but I just find it hard to believe that here we are. Everyone's talking about the world's collapsing. We're on the brink of World War III. The S&P 500 is just about 4,500, and the NASDAQ 100 is just below 16,000. So we're not too far off from all-time highs. November is historically a really good month in the market. We're starting to kick off primaries soon. Obviously, we know when things are kind of looking towards elections, things generally look pretty rosy in the markets. Santa Claus is right around the corner. I'm just kind of curious, would you be risk on or risk off? Somebody asked me that at work. I told you a little bit about it. Would you be risk on or risk off here, Chris? Knowing that we've just had a little bit of a run up, is it time to take a little bit of profits or double down?
No. I think we've got some legs. We've got some room to run. Don't take your chips too off the table too soon. So right now it's just chill. So.
Yeah, I'm a firm believer as well. I mean, to me, and this is the way I was looking at it. This is how I explained it to this gentleman at work today too. I was like, look, you can buy these things. I was just telling him straight up. I was like, I have, my big spec positions. One, I guess, is TQQQ, but actual individual stock security positions, Palantir, Rocket Lab, Bros. But I was like, they're each I would look at this way. If you're an investor looking at this landscape and you're saying, what do I do? Where do I put my capital? And you're saying, over the next 10 years, 20 years or so, it's just like utilize the S&P 500 and what you think the S&P 500 will do almost as your baseline. There's risk associated with it, right? But to me, I'm a firm believer that the S&P 500 is going to be around 9,000 by the time we exit the decade, or maybe the 2031, 2032 time period, right? So if I were to buy an option and try to speculate, and it was like a couple dollar option to buy the S&P 500 for 9,000, I would do it, because I think it's honestly going to get there, plus or minus 500 or 1,000 points, right? I mean, 8,000 to 10,000 is pretty much the same thing as 9,000 to me. You're basically going to get a 100% return between now and the end of the decade. So that gives you about six years to kind of pull that off. My thought process behind that is just, I think there's a lot of innovation going on behind the scenes that is not necessarily fully baked in, and a lot of efficiencies that, will happen between now and I also believe that there's still a lot of money that needs to trickle down into the system, even though, yes, we've seen some inflation. You have a piece of that has yet to really kind of come fully through as well, just underlyingly, right? So I think that all those things will kind of pan out and lead you. So the way I like to look at it is like, you guaranteed you're going to get 100% return, or barely damn near it, in the next 6 to 8 years, let's say. So any investment that you make should really be guarded against whether or not it's going to outcompete the S&P 500 over that time period. Obviously, if it requires you to take on a lot more risk, that is something to consider. Or if you think it's going to outperform substantially, that's something to consider. But also, if you're looking at a thesis and it says, well, this is only going to go up about 50% between now and 2030, why not? Instead of having that single stock risk, is put in the S&P 500. And that's what I'm trying to get after. So the thought process that I have when it comes to like a Palantir, it comes to like a Rocket Lab, it comes to a Dutch Bros, and I'll explain this, and I'm curious what Chris's thoughts are, because I'm sure he could have a lot to add to this, and I've said it before. But like, the way I look at Palantir almost is like, I think that based off of where it's going, it could be anywhere between $120 to $150 billion company. So to me, that means it's going to be able to go from the 40-something billion dollar market cap it is today to 120 to 150 billion. And I think that that's kind of the base case, right? And that's kind of like in the next 10, 15 years time frame. So to me, it's going to outpace the S&P 500, a little bit more risk associated with it, obviously, because, it's a single stock. But that's where I'm parking, 5%, or I guess closer to 6-7% of my money. Then I have Rocket Lab, where I'm parking only 1.5% or maybe 2% of my money. Much more risk, right? But has the opportunity to go from a $2 billion market cap to potentially, I think, like 11 to $15 billion market cap that we're kind of discussing with Vince last week. So, or this weekend. So that's a 5 to 6, 7x. With a little bit more risk, right? So it's like you would probably take something on like that, right? It's like, it's not out of the realm. I think it could do well, and it's one of the better suited in the space. Of course, it's very risky, as Chris alluded to earlier. So it could be some time where you take a little bit, off the top, allow it to, settle in a little bit more, but opportunistic. Then you have something like a Dutch Bros continue to expand, has the opportunity where, yes, it's still cash flow burn, or cash burn at this point, but it's continuing to grow. Massive stores are opening up. The EBITDA is getting there. They're net income positive at this point. They're just spending more than they're making right now, but they're getting closer and closer to that break even. So it's like, okay, I could see that easily outpacing the S&P 500 as well, with, yes, a little bit more risk. But so this gives you a little bit of that thought process as to like, trying to rank things on a risk basis, trying to rank things on where it's going to compete either above or at level with the S&P 500, and trying to organize your portfolio in that sort of manner. Because if you're taking unnecessary risk and you're only going to get returns to the S&P 500, it's not really worth it to be in that opportunity, because you're taking on more risk. It could go to zero in that respect. Versus the S&P 500, really, you're not going to be going to zero unless there's something massively wrong with the country. And if that's the case, you have more to worry about than just money, right? So that's just kind of my thought process there.
Yeah. No, I mean, overall, right now, I'm not seeing any treacherous waters just yet, but I'm always keeping my head on a swivel. If I see some risks, some credit risks out there, I'll be the first one to just shout it out and get, pull myself back. But right now, we're just chilling. So enjoy the wins. I think the wins are going to keep coming our way for the foreseeable future. But then again, if you've got the long term, always buy and hold mindset, that's fine too. Right now, look for companies that are very undervalued relative to what they should be, and whether recession comes or not, don't worry about it. Just chill. So for me right now, I think we have some exceptional gains coming up in 2023. We could see a small pullback in 2024 initially, but I think 24 is going to be a really good year. 25 is going to even be a better year, but we'll see.
Is like, I was thinking the same thing earlier when I was talking to this guy. Like, am I just being blind? Like, am I blind? Am I not the only one that thinks that things are going rather well right now? Even in this restrictive environment where federal funds rates are over, north of 5%? Or am I naive to think that there's not going to be a recession next year? Like, I guess I'm kind of flabbergasted. Like, everyone's sitting here kind of being like, when you look at CNBC, are they just trying to sell advertisements for the commercial breaks?
So think about this. Europe is a museum. Japan is an old folks home, and China is a prison. Where else are you going to put your money? Like, the world is destabilized right now. So the question is, where are you going to actually find some alpha? And the only place that you're seeing it is here in the US. We're innovative. We're a growing economy. We're insulated from a lot of the geopolitical turmoil that's happening. So, I think everyone is looking for that sucker punch right now. And believe it or not, I'm looking for that sucker punch. But I just don't see one right now. Doesn't mean there isn't one coming. So, I think over the last 2 years, we've been trained to think that everything is bad and that everything is going to remain bad. When in actuality, things are not as bad. When you look at the data points that are out there, they're nowhere near as bad as people are assuming. And like I said, the U.S. is still a growing economy. We're still very innovative. We have pockets of weakness here and there, but nowhere near the issues that are around the world. So right now, just all I can say is, if I was a captain of the ship, steady on. There's no icebergs today, but if there's one that's coming, I'll let you guys know.
Yeah, so. I'm curious. I mean, the one thing that this gentleman brought up to me, which I actually was kind of thinking about, was, and it's not with respect to what I'm bringing up right now, but he was talking specifically about, the S&P 500, and yes, it's going up, but it's really only held up by the Magnificent Seven. And to me, it's like, I get that, but the Magnificent Seven are growing at outlandish sort of growth rates, right? I mean, even in the times that they are. So one, they pulled back massively in 2022, maybe to the point where Meta was trading, like Meta was trading at almost single digit PEs, right? So the normalization came, and it actually overcorrected to the point back where it's normalizing again. And maybe now Meta's trading more expensive than it should be, but you still have Google, which is trading in the low 20s PE. Maybe it's kind of back closer to normalized, closer to 25 at this point. But regardless, I mean, to me, the reason why the rest of the market has lagged is because of this restrictive environment. And so when the restrictive environment gets, say, eased up a little bit, the collar gets unchokable, or I don't know if I'm saying that right. The collar gets eased up a bit. We stop choking back the economy based off this north of 5% federal funds rate. That other 493 stocks are probably going to come roaring back, just like what we saw today with Palantir and SLG and all these companies that are being massively impacted by the federal funds rate. I think we're going to see more of that, to the point where we're probably going to massively rally north of 5,000 on the S&P 500 when the first rate decrease actually occurs. So anyway, just some thoughts and back to you.
Yeah, I think this interview really made some really good highlights about what's actually happening. So let's take a look.
And get a full-on strategy session with us tonight, both on set.
It's my
Fund
guy.
Global Advisors managing partner Tom Lee and Bear Traps Report founder Larry McDonald. Larry making his first last call in-person appearance, and we appreciate it, Larry. Thank you. What are your expectations? First off, Larry, welcome. Did I oversell the importance of the CPI?
No, it's a great delivery. I mean, think about, we're up 800 basis points since October 27th. That's one of the long
8% in non-fancy.
8%. That's probably one of the. I mean, you've got to go back a long.
Just for context, this was yesterday. There's an updated Tom Lee one that we got to watch, but this one was from yesterday.
Hot Tom, man.
Time to find that kind of performance into the inflation number. But most importantly, gasoline's down 12% since the summer. Rents have been sticky. But then you have got used car prices. So the bottom line is the bar is extremely high for a soft number.
Well, I know a guy that may or may not have been calling for this rally, and he's sitting next to you, and his name is Tom Lee, not the drummer.
Tom.
Tom, here's the good news. I mean, here's what I worry about, and you were right. But if this number comes in even slightly off, are we doomed? Because has this 8% rally already been the expectation of the softer number?
Brian, you might be surprised, but I think institutional investors and retail have been fighting this rally. You can see it in the put-call ratio. Yes. The put-call ratio today hit 1.26. That's an extremely elevated reading. It's been rising the last 2 weeks. And if you look since the October 27th rally, every time an intraday one.
Shout out to Garcia. Garcia is probably absolutely killing it in this market because Garcia has a crap ton of TQQQ calls. He's one of your degenerates, bro. Degenerate gambler that he is.
Listen to your boy.
Garcia, are you absolutely killing it? Are you stunting on these hoes today? Put it in the chat. I want to know, man.
I'm surprised Garcia's here. He's probably in the Maldives checking in. But
Michael Wilder too. Michael Wilder went in pretty heavy on those TQQ calls.
Did Michael Wilder do it, dude?
Yeah,
Hot Mike.
They're both
Hot Mike knows what he's doing, my guys. They're after my heart. They're after my heart.
Dude.
For those of you guys that don't know what TQQQ is, the fact that you don't and you've been watching this channel upsets me. Okay. Chris and many others, and I'm gonna live this one to the death. TQQQ is a triple leveraged Nasdaq 100. If Chris gets you to invest in DPST, right, then you can invest in it. So keep in mind, yes, there is some, I don't want to call it Cotango, but there's going to be fees associated with it. Everyone says it's a dumb idea, but if you look at the returns of the TQQQ since 2010, it's up like, I think annualized something like 30 or 40% annualized. And the reason being is because the NASDAQ 100 has gone apeshit, basically since the 2010 time period. And so then there's people that say, well, if you had bought it during the dot-com bubble, you wouldn't even have like 10% of your money left. But the problem is it wasn't around back then. And things are actually somewhat reasonable in terms of valuation comparatively to the way they were in the dot-com boom. So to me, it's a gamble on if something like that repeats. I have like $50,000-$60,000 in TQQQ. If something like that repeats, like the 2010 to 2020 rally or 2022 rally, whatever you want to call it, your boy is going to be retired somewhere, and Chris can ride on my jet because nobody. To me, it's a gamble on $60,000. Will I be upset if it goes to zero or only goes to $6,000? I'll be pretty upset, right? But the upside opportunity of that, even if it's a quarter as good as what happened from 2010 to 2022, 2023, your boy's going to be killing it. And your boy is all about
that's because y'all have watermelons for balls, all right? I have like little fucking itty bitty.
You wouldn't say that if you saw them, man. They're not that big. They're not that big.
All right, let's finish this video.
Yeah, my bad.
Yeah.
0.2 is or higher has been hit. We've rallied hard the next day. So I think into this print, if it's a little hot, I think people end up having to buy this dip because hedge funds have been shorting this rally. I know sentiment's negative, but I actually think the probabilities favor a slightly softer reading. The skew is for a hot reading, and I think we could get something that could feel like a face ripper like we had in July. So there's a possibility of quite a positive move tomorrow if it's a soft reading.
So basically, markets are likely to go up if it's hot, and markets are likely to go up a lot more if it's cold.
That's right. I think it's...
And I mean cold coming in at like a 2.8.
That's right. Yeah, it's really going to be the core month over month. Let's say so 0.3 is the consensus, and Goldman's and the JPs are at 0.36.
So you're looking at the month over month, not the year over year that I referenced.
Yes, but the year over year matters. On the core, it's still 4.2 year over year. So something below 4.2 would be considered a soft side reading.
Face ripper.
Possibly face ripper.
Well, Tom, our clients at the Bear Trap Support are all institutional investors, like 90% of our clients. And so we run a conversation every day on the institutional chat. And the conversation in the last 3 weeks has been like, okay, we got a massive CTA chase, these commodity futures trading accounts. They've been basically, to me, that face ripper argument has been going on for 2-3 weeks now, because we came out of a better situation in the tragedy in Israel, softened in terms of the risk. The short covering the last 10, 15 days has been pretty face ripper.
I didn't even know you're going to bring that up, but we actually, I think, have a chart about the CTA's positioning, right? And because while they were so net short, they were so betting against the market, to your point, there it is. That far right side of your screen, this is according to Goldman Sachs and some other bar chart, the far right is the covering, but it looks, Larry, like there's still a lot more to go to get back to that neutral point about being net short. So to Tom's point, if it comes in, soft, won't all those net short people still have to cover?
Well, first of all, putting data like that together is extremely difficult because you're dealing with prime brokers. It's the bottom line. I don't want to get in the weeds, but that data, it could be a little bit.
I'm not a believer.
You're not a believer
or a believer.
All I know is I've heard in the institutional conversations that I've had with some of the biggest buy side funds, they've been on top of this for 2-3 weeks now, and now I'm hearing on CNBC from Tom that it's like a new thing. So I just don't buy that.
So you basically just threw gasoline on our chart and just lit it on fire, which is good. No, it's good. We want that because people are looking at these types of things and making investment decisions.
I don't know who his clients are and how many he has, but
he's sitting right now. You could ask him.
Yeah, but our client.
Tom's hysterical, man. Well, you're on mute, my guy.
Are you seeing the comments?
Yeah.
Garcia's taking his victory lap.
I mean, sometimes you got to do it. But let me just share TQQQ for those of the people that don't know, and don't follow me unless you're prepared, because I will explain this a little bit. So
you need grapes. You need giant fucking balls.
Would you put 60 grand in this? Would you?
Fuck no.
No?
I'm a real investor. Fuck no.
Well,
hell no.
All right. Well, we'll see. So yeah, basically what this is saying is if you invested this back in the day in 2010 when it IPO'd or listed for the first time, you'd be up 105x your money, which is an annualized return since it came of 37.29%. annualized. So the last 10 years been 32% basically annualized. The past 3 years has only been 4% annualized. The last year, 59%. So even the past 5 years, it's been 20%, 21% annualized. But you could see, I mean, before we had 2022 and the interest rates kind of coming in, this thing was up to 83.17 per share, and it dropped all the way to $17.30, which is a drop of like over 70%. And you have to think, I mean, we dropped like 30%. So, I mean, it's triple leveraged, right? So it goes triple leveraged up, it goes triple leveraged down. But that's the thing is when it builds triple leverage, it resets every day, right? So if you have 3% up one day and then 3% up the next day, you're going up 9% one day and then 9% the next day, but that's building on top of each other, compounds in that respect. But here we are only at $43. So we haven't even gotten back to halfway where we were. back in 2021. But, we're not too far from all-time highs and making new ground. So we'll see what ends up happening with that one. Hot Chris, man. I'm surprised you're not about it.
I'm not gonna do it. Nope. Maybe 25-year-old Chris when he was unmarried, still living his dangerous years, maybe. But I'm a lot more like conscious of being married, so I can't do that anymore. I can't go degen status anymore. You don't have a wife. Once you get a wife, you got to make all the investment decisions through the lens of a married man. It's like, should I lose half my money via TQQQ and then the rest of it will go when my wife leaves and takes the other half? Or should I stay married and just chill with TQQQ? So, yeah.
So I'm curious. You said that Tom Lee had a different and more up-to-date after the report printed. I'm curious if he changed his tune and he thinks that we're gonna take a pause or if we're gonna rock it like he always
he's gonna stunt on these hoes today. That's what he's gonna do.
So while Chris brings that up, I'm just gonna share the change in the GDP. So the growth that we saw in Q3 was pretty interesting, almost 5% comparatively to where we were, which is pretty crazy. So the fact that we're printing numbers like that is pretty wild. So comparatively to where we were last year, when we were actually seeing quarter after quarter GDP declines, which was pretty interesting.
All right.
He didn't say his wife was a bad investment. He said his wife makes him more conservative.
My wife makes way more money than I do, by the way. She just got a raise too. She's the smartest. Dude, the best investment that I've made so far has been my wife. All right. I could not have done any of this YouTube shit. I didn't have the confidence to do it.
That's
She's
true.
the one that kind of
pushes
it forward. She's the one that made a lot of me being public more possible. All right.
So, hey, by the way, you were supposed to find me some Daisy girl when we were in Vegas. What ended up happening?
No. You find your own, bro. I recommend against these Daisy chicks, bro. They come with all sorts of drama. No, dude.
Oh man. That's the way I like it though. I like a little drama in my life. Keeps it spicy.
Back in, Mr. Tom Lee, Fundstrat Global Advisors, co-founder, managing. So let's welcome back in Mr. Tom Lee, Fundstrat Global Advisors, co-founder, managing partner. Tom, congrats. Great call. Thanks for coming back. I mean, take a victory lap, if you will. But do you see more to come on this?
I do, Brian. I think there were some big inflections today. The inflation trajectory, I think, has legged down because shelter finally broke. I think it puts people into a soft landing camp. We saw a huge move in interest rates. The 10-year might be going down to 4.3, maybe even towards low fours. And as you mentioned earlier, people are offside. So I think this is a formula for stocks to sustain gains well into year end.
Yeah. And you were noting last night on the program, and I don't have the numbers exactly in my head, but you were talking about put call ratios in the market. Yes. And we hit certain levels. It was always acting as like a trigger, like a spring for the market. I would imagine those numbers probably shifted today.
That's right. I'll be looking at those numbers tomorrow, but the equity put call hit 1.26 into the close on Monday. That's an extremely bearish. Investors are very bearish, which is a contrarian bullish signal. And as you know, the prime brokerage data you showed, hedge funds have been shorting the market for 14 consecutive weeks. So one day pop isn't going to reverse all this bearish sentiment and positioning.
Yeah. When I look at, it was a great day, so I don't want to be like the negative dude, okay? But if we can bring up the best performers in the S&P 500 today, it was stocks that are mostly the worst performers for the year. You had First Solar 100%. On there, Solar Edge, Enphase. These stocks have been just crushed all year. They were heavily shorted. They had huge rallies today. Do we need to be concerned that it was kind of a bottom-up rally in a way, where the stocks that were the most heavily shorted were the ones that did the best?
Well, Richard Russell famously said all rallies start with short covering. So I think that's how it starts. But there is so much money on the sidelines that the inflows into year-end are going to lift, I think, create a lot of market breadth. And just as you point out, the Nasdaq's up 45% year-to-date. That's 10 years worth of returns if you had parked your money in cash. So stock market is really reminding people that you can you can be slightly greedy and generate much better returns than
35
cash.
year to date.
And we still have
Holy
about
shit.
6 trading weeks to go, and we could, the QQQ, fourth best year on record. Not sure it's going to make the 54% that it hit. I think it was in 2009 or 2011, one of those years. I don't know if we'll get to there, but do you expect more of these indexes to make new highs this year, Tom?
Yes. Our top sort of 3 favorite ways to be allocated into year end is technology, which is the Qs, it's industrials, and small cap. Small caps are really capable of making quite a big move into year end because it doesn't take a lot of inflows to generate a big move in those names. And, we are in a seasonally favorable period. So I think if the S&P is up 6 or 7% into year end, small caps can do a lot better.
Yeah, I've had a lot of people. I have a separate group that have been following me now for a couple of years, and have been chatting with them. They've been all in on IWM, which is a Russell 2000. And if you think that the SPY took a hit during all this 2022 fiasco, I mean, those small companies are the ones that are truly relying on the federal funds rate to truly fund their future growth. And the fact that they were kind of cut off from that really hit a lot of them hard. So you're seeing a lot of that IWM reversal really in the second half of this year kind of come through. And I think Tom's right. I mean, with those companies, let me just see, year to date, it's not too good, but over the last month or so, I thought it'd be a lot better than it has been, actually. So maybe I should eat my words there. But I think that as you see the federal funds rate come down, the stocks that are going to do the best are probably the Russell 2000 because of that reason, because of the fact that they've been so hampered due to the federal funds rate. They'll finally get a little bit of breathing room. And that's really, I think that's really what ends up happening a lot of times is small caps are probably the most volatile in general, maybe not necessarily this cycle, but they're always kind of the ones that get hit the hardest and then the ones that bounce back the hardest as well because of that reason. So anyway.
Yeah. There's actually a lot of great small cap names that I've been looking into. There's one in particular that I asked you to add to our calendar that I'll go over because I think that one has a lot of dramatic.
Is that the one we're talking about this Thursday?
Yes,
Course,
and Paycom. So those are two that are amazing in my opinion, especially Atcore. Like Atcore being at this current valuation, I'm just like, thank God I have the cash right now more to buy into it. So you'll see. I'll do the entire deep analysis on what's going on with Atcore, and so yeah, it'll be interesting. Yep.
While we're talking about the calendar, shout out to 123 people in the chat. I think that 123 is a record for us, so that's awesome. Thank you for your kind time. I know it's worth a lot these days, but really appreciate you guys coming out. I'm curious. We talked a little bit about Astra. We didn't get into Rumble today. I just wasn't impressed by Rumble's numbers. I don't even want to bring it into the chat. We do have NVIDIA next week, so I'm kind of curious if that's going to somehow spike up another 20% like it did last quarter or what, because that would bring it over $600 a share. Atcore is this Thursday. Chris,
so
is there any other...
Not to be a stickler, but I don't think you have your dates right. Just saying.
Which one?
Because today, you did Astra yesterday, right?
I didn't do anything. Astra reported yesterday. It doesn't mean necessarily.
Gotcha. Yeah. I thought this is the day that we're talking about.
Yeah, generally it is, but Astra was yesterday. We don't generally do a show on Mondays unless we get enough people that show up. I mean, 100 people, shit, I can't let them down. We just start doing shows on Mondays maybe. But I'm curious, is there any other companies? We got Snowflake, which I'm sure you're all about towards the end of the month. We're seeing how you and Adam from Finance 411 are stacking up on your bet, which you've gone radio silent on. But sorry, I had to shove the knife in there. But
listen,
Paycom, that's right.
I just took the $2,000. I just like, all right, you know what? Adam is getting this. And the way that I'm framing it in my head is that Adam did not win. Okay. This is a contribution to Adam's kid's future because I don't ever believe that I ever lose. But yes, Adam will in all likelihood, Adam will be right in that Palantir outperforms Snowflake. Unless the 29th, Snowflake comes up with such monstrous numbers and Palantir says that Alex Karp is resigning or some shit. I have just put $2,000 away and just saying, you know what, this $2,000 is going towards Adam's kids. And that's
really curious because Snowflake said after their Q2 earnings, it was kind of a really sad moment for them. They said that things are going to be kind of rather flat for the rest of the year, and so I'm kind of curious what they show up with. If they have a little bit of anemic growth, or if they flatlined as they said they would, or if things are kind of turning around, because it seemed like they were sandbagging for the rest of the year. So I'm curious how that kind of comes out. Chris, do you know when Paycom is coming out with earnings?
They already
did. So is that something you want to cover tomorrow, or do you want to cover that with Atcore on Thursday?
We can do that tomorrow.
Okay.
Paycom got smashed during their earnings. They actually lost almost 40 something % of their market cap. They lost almost, but here's the thing, fundamentally the business is fine. So that's the one thing that we're going to analyze tomorrow.
Okay, very good.
It's been having a nice little recovery since then, though. So
that's the thing, man. Sometimes in these stocks, they get hampered. Like look at Google, right? Like everyone was like freaking out. I sold puts at 110 or whatever on Google because I was like, this is going to be easy money. There's no way. And if it goes below 110, I'm buying 100 shares. Like it just didn't make any sense. That was free money. I should buy that back if I haven't already.
Dude, shout out to all my Patreon people, bro. Let me tell you, when Google was down, they didn't be like, oh my God, why is Google? They were just like, yo, Chris, what is going on? I explained, and boom, they were loading the boat, bro. And so they are absolutely killing it right now. So all you guys on the Patreon that loaded up, I know Sam sold at the top and he bought back at the bottom. So shout outs to Sam. Shout outs to everyone who was like, let's go. Google is going to make this recovery. I posted on the Patreon and we did freaking awesome. And right now, those spreads are just killing it. So we're going to keep going. Look at TTD. I definitely have to do more research on TTD. You know what,
Is
Sam?
that Trade Desk? Yeah, that is Trade Desk.
Yeah. Sam, if you're free one of these nights, come on Cashflow Chronicles and explain TTD for everyone. Because I think that
we have an open slot tomorrow. We could talk about Paycom and TTD. We could talk about, if Sam can't make it tomorrow, then we could talk about Atcore and TTD on Thursday. There's a lot of opportunities. There's a lot of different stocks out there. So if any of you guys are curious, you can always just reach out and let me know.
Confluent was another one. Yeah, CFLT.
What the heck is that?
Confluence did a major recovery too.
That is. I see that big spike.
Look at that. It went from 28 down to 16, and it spiked almost to $20. Today it's almost at $20 again. I know Sam was loading the boat on Confluent. Good.
Check that out. That's pretty crazy. I don't even know what these guys do. So this is the part that's beautiful about Cashflow Chronicles is like there's so many different stocks out there, and that's part of the better part of investing in the S&P 500, but it's also part of just having people to chat about stocks with is because you get to see these opportunities. Like I wouldn't have never known about Dutch Bros in 2021 had it not been for my boy GW and Ian the Puck. So that's, these companies get pulled out because people are familiar with them. And the US is so big sometimes that something might be regional, like some regional banks, So it's fun to be able to pull up some of these stocks and learn more, and interact with people because they might know something's coming on the market and you had no idea because you're concentrating on X, Y, and Z stock, and it might just fly under the radar. You know what I mean?
Absolutely. All right.
Well, thank you guys. Another 100 viewers concurrently today. That's phenomenal. We hit over 120 at one point. We actually were at about 100, 115. It dipped down back below 100, and then you guys rallied back towards the second half of the stream. So as always, really excited for you guys to join. We have a few things in the works. I know I'm looking for an editor to make an intro, so that'd be cool. Somebody, Zoe, just talked about a soundboard. That'd be something I'd be on board with. Sooner rather than later, I'm going to be getting a new camera, some lighting, so things will look a little bit better. I actually need to hang some crap on the wall. It's been over a week since I've lived in this place. I haven't hung anything yet, so I still need to move a bunch of stuff upstairs as well. We'll talk, and Sam, make sure you hit me up in my DMs or Chris's DMs on X We could figure out if you're better to come on tomorrow or Thursday. And as always, let me think. If you have any thoughts about any stocks, just let us know, and we'll see.
So Sam was asking about DD for Atcore. It's in the Patreon. Just go to the search feature and just search for Atcore, and you'll see it there. So all the data is there.
Institutional buys on Cosmos Energy. Interesting. I could do a deep dive on Cosmos. I know a little bit about Cosmos. Maybe one of these days when we have an open docket. Cool. Yep. All right. Talk about oil stocks. I try to distance myself a little bit from oil because I don't want to get myself in any trouble. So as always, thank you guys. Really looking forward to it. If you guys haven't already subscribed to Chris's Patreon, link is in the description below. Chris, you already maxed out. Do you want to talk a little bit about how you maxed out your lower tier subscriptions or no?
Yeah, I had a introductory $5 promotional tier that, it hit its limit. So the $10 one hit its limit. And so the only one that was left was the $25 one. So I said, you know what, let me open up some more slots for the $10 one. So that's been good, and the thing is some people, they join, but they only want to give a certain amount of money and then they leave, which is fine too. I'm happy to share my information with everyone. They're like, hey, I'll be back another 6 months or something. That's cool. So it's an interesting way that people find creators, and it's good because they have this chat feature in Patreon. So I'm able to communicate directly with everyone, which is really cool. I did not want to go the Discord route initially because Discord can get really chatty. So there's a lot of chatter that can happen. And the thing is I work full time. I'm doing DD, I'm researching. So I don't have the time to commit as much to keeping up with the Discord. But Sam has actually offered to help me out graciously on managing the Discord. So, we're working on that right now. Once the Discord is up, people will be able to join. A lot of that DD that I have will still be posted on the Patreon, but it'll also be in the Discord, so that this way, people can get a fundamental understanding. And also, I guess what I'm trying to do is just go into community building mode, where now people can actually, build a community around all this stuff, so that there can be things that I get to learn from them that I may not have initially looked at. Like SiriusXM, Buffett bought SiriusXM, but I don't know why. But it was interesting because someone in the chat actually mentioned hey, did you look at the spectrum that Sirius probably has? And I was like, wow, I never even thought about that. So when it comes to investing, a lot of times what happens is, you can go out there looking for stuff, and then people can sometimes bring stuff to you. And then all you have to do is just do that deep dive into fundamental analysis and see if it fits into the wheelhouse. And so I think we're at a point right now with enough members that now we can actually build a community, as opposed to just, one guy talking and a lot of people just listening and commenting. And so, like I said, Sam's going to help me build that out a little bit. I'm not the most technologically advanced person when it comes to Discord. So if someone else knows how to do Discord, then that's a big benefit to me. So my main focus is always going to be doing a lot of due diligence on companies, and then also on the macro, and then combining that, and then having the unique discussions with people and saying, how does this company fit into the larger picture, or where's the opportunity? And also sometimes some strategies. So it's I'm a middle-aged man. I'm married. I have responsibilities that I need to take care of. So Chris has a strong pullout game, bro. I don't have a strong pullout game. All right. I've been dropping loads all over the place. Maybe I need to get that checked out, dude.
I need to get your shit tested. But always a good time. Chris, I noticed that, so I wanted to give a shout out to the Patreon, because I know somebody was like, oh, I saw that there was 2 spots opening up. So always be on the lookout, because those might open up. And there's always the upper tier as well for $25 a month, I think. That's the one I'm in. To support you. And but as always, if you guys are ever interested and want to support our channel, all the money goes into the portfolio that we showed you guys earlier. So we're hoping to get that and show you guys how we're building a portfolio from scratch. So any memberships that you do on this channel will also be feeding that. And shout out to the folks that have been watching the videos. The last 3 that we dropped have been absolutely explosive, and we actually are up in subscribers like probably 100 over the past few days or so. So you guys have been absolutely killing it from that respect, and all that money, it just shows like after a couple days, I think we made like $33 on the channel yesterday just from viewership, and all that money is going to be showing up in the December time frame when we go to load it into the YouTube Moolah portfolio. So you guys rock, and we're really happy to start seeing over 100 viewers. But the soundboard is, I think, the best idea to date. So Zokol, good shot on that. I got to figure out how that works.
I might have to reach out to Zokol and be like, Zo, what's going on? He I think he's at 3 kids right now, bro. So you know what? Maybe I should be calling him like, Zo, what's going on, bro? What am I doing? Help me, Master Obi-Wan. Help me figure out what's going on. Maybe my stroke is wrong.
Yeah, man, he might have some good tips, my guys.
I think the funniest one that I heard was do it and then take her legs and just like put them up in the all right. Yes,
you're in trouble.
My wife is giving me that look, bro. But basically it was just let gravity do its job. All right. You can kill me later. Okay?
Oh God, you're in trouble. Well, if I don't hear from you tomorrow, I know what happened. I'll talk to you guys later.
Yeah. Bye.